Okay, let's jump on the chart and do a quick example for US 30. So on my right here, I have my chart of the Dow Jones, and on the left, I have my DXY as a reference to look at the movements, okay? At the correlation between the movements. So if we look at the chart on the Dow, we see that we have this large period of consolidation, okay? With multiple tests of the support here around 28,800, okay? So large consolidation period, we broke it up to the upside. We have a very decisive movement, very aggressive movement, pushing upwards, okay? I don't remember the fundamental situation at that moment. We are end of October 2022, but I do remember taking this trade, okay? So basically, we're looking for a buy. We're looking for a long on the Dow, and now let's see how we can build a good analysis, a good technical analysis, and then find our perfect entry point. Okay. So if we zoom here, okay, we currently have broken this EMA, which is the daily 50 EMA right over here. Okay, that has been broken. And basically what we're gonna do is look for a retracement to basically just jump on the movement and get on the way. Since the movement is very aggressive, it's very decisive, we know that our main focus will be basically the 23, 38, or 50%, okay? 50% is not as likely, so either 23 or 38. Okay, it's going to be mostly one of these two. So just by looking at the chart right now, I can already see that the 38.2 lines perfectly with this level of support right around here. Okay, so let's draw a zone like this. The price is around 31, 900, 800, something in this area. Let's just stretch it for the wick here. Just like that, so we get the whole area. Okay, so this area is an area of interest, okay, but we can also say that the 50% below could be an area of interest, okay. We have the EMAs, the 50 EMA for hour, the 100 EMA for hour. We have this level of support, we have this small resistance, we could be used as a pullback, okay. But it's going to be less likely that we reach the 50%. Why? Because we know the behavior of the Dow Jones when we are trending, when the movement is decisive, when we're aggressive. We're not going to see a 50% basically retracement most of the time. It's going to be limited to 23 or 38. 23, there's nothing in terms of confluence, okay, over there. So it's going to be either 38, okay, which is probably 90% chance that we get there. If we see the price just, smashing through, then we get to 50%, okay? Another thing to consider is that the EMAs are going to be moving, okay? They're going to be pushing and they might get past the 50% in a few candles, okay? So maybe in a few candlesticks, this EMA will be here or be here, okay? If that's the case, well, the 50% is invalid because it would mean that we go below the EMA, okay? Which would not work for this type of trade. So if we advance the chart and look at what happens, so market is coming back down. Bit of consolidation around here, some kind of double top. Okay, and then you see the EMA. The 50 EMA has pushed right over here. It's currently at the 38.2, just a bit above. The 100 EMA is at the 50, okay? So basically the EMA is moving very, very fast, the 50 EMA 4-hour, and I think it's going to be an obstacle for this type of trade. So let's see what happens. Okay, so price is moving. Okay, then we have a big reaction here on the resistance at 33,000. Price moved all the way here to the EMA. So basically some traders might see this kind of price action and say, okay, so we touched the 50 EMA, so I'm gonna enter the trade here. Okay, I'm gonna go long over here, basically put my stop loss over there and do the trade and so on and so forth, okay? But is that the best possible price that we have for our our chart for the Dow Jones? Absolutely not, okay? I'm never going to enter between two fibs, even if there's some kind of confluence with the EMA, okay? Here we're below the 23, so the 23 was broken, so this level is automatically invalid, okay? Because we broke below and we closed below, okay? Here we have the close of the 4 hour. So basically, I'm looking for the 38 now, okay? Which is going to be my level that makes the most sense. So let's see what happens. Okay, so we bounce a little bit on the EMA. So 2 candles in 4 hours. So for 8 hours, basically, okay, we're sitting on the EMA. So this is very appetizing. This is very enticing to enter in the trade. There's a lot of traders who, you know, might get scared. You might fear that they miss the trade if they don't enter right now. They might fear that we never reach the levels below, okay? But is it the best possible price? No. Since it's not the best possible price, I prefer to simply not enter the trade than rather entering the trade and the market moving below, stopping me out and basically moving up afterwards, okay? So for the moment, we wait because we don't have our exact perfect price that we want, okay? You always have to wait for the best possible price or no price. So finally, we break below. So you see this candlestick, this is the first sign that the market wants to push below, okay? And that this EMA was, of course, broken. So our patience already with this candle, I know it paid off. All right, so we have this big candle pushing through the 38, okay? Closing at around 31,750, okay? And then the next one comes straight back, okay? So this is very interesting, okay? And this links with the behavior of the Dow Jones. So basically, if we zoom in a little bit, we saw that it broke the 38, okay? Basically, at this moment, would we make a trade? Of course not. But the next candlestick just afterwards, we came back up to this area, okay? Near the EMA. We bounced a little bit, but we closed basically above the 38. So this whole section here is basically leaking. We are leaking from the fib level. We're leaking from this area of confluence, of support, of wicks, of volume. We're leaking from this area. We went below, okay? But the next candle, we came back, closed and reverse, and we basically closed around 32,000 above the 38.2, okay? So now what's the next step? Two possibilities. So let's just remove the little drawings. Okay, so two possibilities. Either we bounce back, we go below, we go to the 50 and we bounce back up, or we bounce back down, we go back to the 38, and just like I did with my example in the previous section, if we don't go below this area, below the 38.2, okay, and we resist, in this case support, if the price action supports at this area, it means that this was just, a manipulation, a stop hunt, price was just leaking, just fishing for liquidity, and basically now the 38.2 is now the real support, and we bounce from there and we push higher, okay? So to do that, I will have to do another fib. So I would do a small fib just on this section of the movement. So from this wick to this wick, okay? And what do I see? I see that the 61.8, since it's a small retracement, we can go for the larger numbers. The 61.8 is pretty much lined up with the 38.2. Okay, we have a confluence here between the 2 points. So my area of interest would be basically this area right around here. Okay, so basically 31, 880, 875, something like that. Okay, this whole area here. I want to see the price coming back here, and I want to see the price bouncing back up. Okay, currently we're on the 4 hour. So of course you would go on the lower time frame. You would go in 1 hour. You can even go in 30 minutes or 15 minutes to have more precision. But with the replay function here on TradingView, we cannot do that without messing the chart. So we have no choice to stay in 4 hour, but if you were to trade this movement in real time, of course you would lower your time frames to have your your confirmation of the price action at this area. Okay, so you would either see the price action coming here and leaking below, or you will see it bouncing up. If it leaks below, then we're looking for the 50%. If it starts bouncing up, then we enter here and we extend the movement higher and we follow the trend. So let's see how basically what happens basically. So market is coming back down, perfect. All right, touches the 50, not quite the 61.8, not quite the 38.2. Let's wait a bit more. Okay, bounces a bit more, goes back up. Okay, and boom, comes back. All right, so this was what I was waiting for. Okay, so you see this this wick that happened right over here at this moment. Let's just change the color. Let's put it yellow. Okay, you see this area over here. Of course, in 4 hour, you're just gonna see the wick and the rejection. But on the 1 hour and the 15 minutes, you would see a couple candles going down. You would see some kind of rejection here, and then you would see basically, price rising up quickly, very, back up very quickly. So basically, this proves to me that this basically kind of price action was just, like I said, liquidity hunting, fishing, just, basically a step out from the traders that maybe had a few buy limits at this area. And this kind of reaction with, an instant reaction to the upside proves to me that the 38.2 is now the support, okay, and that we're looking to push above. So that's a pretty solid price action to me. Like I said, we would go on the lower time frame and find an entry point around here somewhere. Okay, so let's say if you're good, maybe you enter around, around the 50%, around this support here. Okay, in 15 minutes or 30 minutes, something like that. Your stop loss would be below this wick. Okay, so let's put it like, let's be generous. Let's put it at 150 pips, just in case it comes back. So 151 points here. And then for the take profit, well, we have a couple choices. For the take profit, we're not going to use the small fib because the small fib was just used to basically validate this support. So now the small fib is not necessary anymore. We can remove it and we can go back to our large fib, the 38.2 fib that we used in the beginning. So basically we have an extension at minus 27 and we have an extension at minus 61.8. If we look at the area of confluence, the minus 61.8 is quite far. Minus 27 is at 33,750, which looks good. We can even try to do, an inverse fib from this section to see if it matches with a 78. No, 78, it was actually the reaction. Okay, so this fib is useless. Okay. So basically, I think my strategy on this one would be to put the take profit at the minus 27, just a bit before. Okay. And then identify the obstacles on the way. So my obstacles would be basically this resistance here, would be the large resistance at 33,000 right over here. And then we pretty much have, well, okay, let's put one here at 33,350, and then we pretty much have wide open space until we reach the take profit. So we have one obstacle, two obstacle, a third obstacle, and our final take profit. There you go. So I would put my take profit at the end, which is about 1,800 points, which is a lot of points. I'm risking 150 points, which is a risk reward of about 12, which is great. But if I see rejections on the different obstacles along the way, so if I see rejections here or here or here, I will take partial profits, or I could simply exit my position at any time and I'd be happy with the result. And when I say partial profit, just like we saw in the Apex Paragon course, you're just gonna take a portion of your profits off from basically your position. So you might close 30%, 40%, 50%, 20%, whatever amount that you feel you should close, you close it depending on the reaction size on the obstacle. So let's see what happens next. So let's fast forward the chart. So price comes back to the basically 61 to our entry point. Then we have another bullish reaction. So this is actually quite interesting, and we can learn a lot from these types of movement. So when we had the first reaction on the 38.2, the small 61.8 fib, and the market bounced back, some other group of institutional investors from other banks, other hedge fund, saw the same thing that we did, right? So they decided to bring the price back, okay, a second time. So this is a second wave. So the second retest is a second wave from other traders, from other banks, from other institutions to come back and enter and execute the order at this area, okay? So that means that our trade is now even more confirmed because the big money followed the movement. And if you did not have the chance to enter on the first entry, you had the chance to enter on the second entry. And our stop loss was well placed, so we had no worries regarding that. I don't even think we were in drawdown. We just came back to break even. So now basically there's no reason to come back a third time, okay, because everyone is in the trade. So now let's see if we can push forward, okay? So market has now broken the 50 EMA on the 4 hour, broken this 50 EMA on the daily. We're on the first obstacle, okay? Do we reject it or we go straight through it? Okay, we go straight, perfect. Then we get to near the 33,000. What happens next? Okay, we're a bit above the 33,000. And we go straight to the 33,350 area over here, and we make a wick, okay? So basically at this point, we're so near the take profit, you could have two possibilities. Either you just take a partial profit, you close maybe 50%, half your position, you let the rest run, or you can just, close the trade maybe over here when we get back on the retracement after rejection, and you close out 1,262 points on your trade. That's probably what personally I would have done. Okay, I would just have closed the trade. Still gives me a great risk reward, and of course our stop loss was break even as soon as we broken the first obstacle around here. Stop loss break even. There's no reason for the price to come back over here. Okay, so that's basically how I would have structured my trade on this one. So basically we waited for the 38.2 because the confluence was there, not necessarily the 50% because the trend was decisive, was aggressive, and a deeper retracement would mean that the trend has lost momentum, so you would have less confluence on the intentions of your trade, okay? So we were waiting for the 38. Once we reached the 38, we saw that there was a bit of leakage. But the next candle, we came back up to 32,000 and we closed above the 38 fib, okay? Then we wanted to see, okay, is now the 38 going to be respected or are we going to leak below? It was respected, it was tested 2 times. First time, big reaction. Second time, other institutional groups brought the price back and decided to enter, basically enjoy the movement, okay? We identified the obstacles on the way. We put our stop loss break even when we reach this area over here. And basically, once we had the reaction here on the obstacle, before the take profit on the third obstacle, well, I just decided to close the trade around this area and just, put the points, put the pips in my pocket, okay? So that's basically what would have happened in terms of analysis and execution for your trade, okay? Now, we didn't discuss DXY. If we look quickly at the DXY, okay, and we look at this area right around here, okay. So you see that when we're looking for the long around the 38.2, okay, and then we have our reaction right over here on this week, okay, which is basically Friday, November 4th, okay, and you look at the DXY, you look that we topped at this level, and you see that we have broken this small support, okay, so exactly over here, okay, this is the candle in question. You see that basically as soon as we had that small fib 61.8 matched up with the 38.2 and we had that reaction, the DXY, which means USD, was getting sold off, which means that my US 30 will continue, okay, its movement to the upside, okay. So the confluence was okay, this is okay, this is okay, perfect, everything was well aligned. Then we saw, you know, USD gets, you know, sold off, USD went down, DXY went down, and US 30 went up, okay. So everything was in order, and this is the type of trades that we want to make. So you see, even one trade like this per month, you make 1,000 points on Dow Jones on the trade, and this is with a single position. You could have added a second position if you have more experience around here. You know, you can go on the lower time frames and see multiple areas that you can add position and end up with 2,000 points total in your trade, okay? But regardless, even if you make 1,000, 1,500, 1,200, you know, points on your trade with one or two position, even if you make one trade like that per month, that's plenty enough of points to grow your account, to do 15, 20, 30, 40% of your account very safely, and you basically just risk on one trade, okay? That's why I always say quality is always better than quantity, and it's better to wait for those types of trade where everything is making sense, where you can build a narrative, where you can see the price action actually, you know, playing in your favor, that the correlation are matching, that everything is perfect, and those type of trades, you know, they're not going to happen every day, but when they happen, you want to execute them. You want to make sure that you're in them and that you run them until the end of their movements, and that's how you grow your account. You limit your exposure to the market. You don't do many trades, but when you make a trade, you make sure it's a big trade and that you can, you know, maybe add positions if you have experience, or even if you don't have positions, add positions. At least it's a solid movement, it's an aggressive movement, it's a decisive movement in the right direction, okay? So you're gonna make a lot of pips, a lot of points, reduce your exposure, and basically have a high accuracy rate, and then you repeat that process month after month, year after year, and that's how you grow and you stay consistent in your trading, okay? So once again, that's very, very important.